Hi everyone, welcome back to 33 Founders. I'm really excited you're with us today because I'm here with Nikhil Basu Trivedi of Shasta Ventures. Thank you so much for being with me, Nikhil.
Thanks, Jenna.
That was pretty close, actually. I'm excited. So let's dive right in. I learned about your work with a recent piece that you and Todd Francis worked on about what billion-dollar companies look like at their Series A. Tell me what your main learning was from that experience.
Yeah, so if you haven't seen the piece, we put this out on Medium last week, and at Shasta we focus typically on early stage investing. A lot of the investments we make are at the Series A stage, and so one of the things that we were intuitively curious about is, are there any special traits of the companies that generate, the majority of our returns, the billion-dollar plus companies, the unicorns. Are there any special traits of those companies at their early stage, like at their Series A round stage? And so that's kind of the question that we had that led to the research that led to the blog post. And there were 5 key traits that we found. And every one of these companies is clearly unique, is clearly an outlier. And so, none of these are hard and fast rules, or they don't prove anything. But what we found was a lot of these companies that are unicorns, are ideas that are easy to dismiss at the beginning of the company's journey, are typically in quite competitive markets, are started by founders. The majority of the companies we found are started by founders that have not had a previous success, and have been kind of untested. Many of the companies had zero monetization at the Series A, and finally, and we focused in the study on consumer companies because Todd and myself focused more on the consumer side at Shasta. The final learning was that many of these companies reinvent existing consumer behavior rather than create new consumer behavior.
Yeah, I love the post, and it's received so much well-deserved traction because you guys just did such a great job of simplifying it for everyone. One of the things that really caught my attention was when you guys were discussing untested founders. Do you guys enjoy taking a risk? How do you know when it's a first-time founder that, hey, this is an A-plus entrepreneur?
Yeah, I mean that is the key question that we
all intense
as venture capitalists, right? Because everyone says they want to back extraordinary founders, and we want to get into business with people who we think are just going to make it happen. But it's really hard to tell, right? There's no perfect resume of an exceptional founder. And so what we look for is people who are just maniacally focused on product and end user experience. We think like the companies that really stand the test of time have that focus on end users that powers them through. Founders who are just relentless, who you can kind of tell, and so we try to feel some of this out, right? Like, are they going to be the types of people who will just run through wall after wall to make it happen? Founders who can kind of paint the vision of where they see the product ultimately going, even if and this is another kind of going back to these things, like even if the idea at the beginning is kind of easy to dismiss and throw away, a great example of that is Airbnb, right? Those founders, the company at the beginning was sleeping on air mattresses or having an opportunity to sleep on an air mattress at someone else's house or apartment. And that idea was kind of a wild idea, right? But they had this vision of how they could get to ultimately disrupting where people stay anywhere, right? And how people experience new places. And so, like, kind of relentlessness, vision, maniacal focus on end user experience, those are some of the things we think about.
The Melanie Perkins of the world.
Yeah, Melanie at Canva is a great example of that.
I'd love to actually go through the process of a typical investment for you, and I thought we could use Hinge as an example to make it easy. How
Okay,
did you get introduced to Justin?
sure. Hinge is a dating app. It's a way to meet new people via your friends.
Hmm.
You log into Hinge via Facebook, and you get to um, uh, see matches, potential matches based on your friends and your friends of friends. Um, and so that's the experience. I heard about Hinge quite a bit from my friend group. It's kind of taken off amongst my demographic in the last couple of years, and so I kept hearing about Hinge, and I was with a friend of mine, Sam Koken at CAA, which is a talent agency down in LA. And Sam and CAA are investors in Hinge. They were in the seed round of the company. And, I showed Sam I have like 400 friends on Hinge because Hinge in
Wow.
the app shows you how many of your friends are also on the app. And then Sam shot off a note to Justin, the CEO of Hinge, saying, "Hey, this guy Nikhil at Shasta Ventures is really interested in what you're doing. He has so many friends on Hinge." And then Justin and I had a phone call, and I instantly was impressed by his vision for how Hinge is just a better way to meet new people, and how existing options don't quite capture that magic of getting to meet someone in real life via a friend-to-friend connection. Met with Justin in New York, my partner Todd, and then my partners Jason and Rob and Sean, and all of us were just super impressed by him, and we're lucky that he decided to work with us, and so we're really fired up about being part of the company.
What was it about them that made you think, I should probably invest in this?
I think again going back to some of these key learnings.
I know this post is the foundation for everything. It's helped me so much.
Yeah, there are lots of dating apps, right? And so it's kind of easy to dismiss another dating app,
Hmm.
but Hinge has just great mind share amongst kind of the 20 to 30 well-educated demographic in big cities, and a lot of people use it. As a function of that, it's growing organically by word of mouth, and that is pretty special in the dating app category. A lot of apps don't get to the scale of hundreds of thousands of daily users like Hinge without having to pay money to acquire customers via app install ads and things like that. There would in the data, and when we dug deeper, we could tell this was a pretty special app and company by word of mouth and getting great repeat usage. And then it's really drawn to the team. Like I was saying earlier, Justin, uh, uh, who's the founder, really impressed us. Karen, who's the head of marketing, Sam, the head of product, Eric, the head of engineering, all of them really impressed us. And I think there's one thing actually in particular that, as I reflect on this, that really impressed us about the team. They have this just phenomenal culture that's focused on these three core values: being bold, being human, being real, that guide the way the product is built and the vision for the product moving forward, and also guide the way the team has been built. And um, and uh, and and so it's rare to come across a company that has kind of all those different dynamics.
One of the things that really intrigued me when I was reading your blog about the investment a little while back was that a lot of dating apps have product leaks in the sense that I use it once and I don't use it again, or I use it 3 or 4 times and now I'm in a relationship so I don't come back. How are you helping them see the continuum of Hinge?
Yeah, well, we actually think it's great when people
Find a match.
meet each other on Hinge and thus stop using the product. So our belief is like we want people to get to that stage, But we want everyone in the world to get to that stage using Hinge. And there's plenty of people who, who are out there for us to use Hinge. And so we don't worry about users churning because they've had an awesome experience, right? In that case, they'll, I have plenty of people in my friend group who have met their significant others or met great people on Hinge. And the great thing about that is that they're telling other people that they had a great experience on Hinge. So it's leading to that word of mouth growth that I was describing earlier. What we want is to get everyone to that stage. And so what we don't want is people coming in the door of Hinge not having a great experience and thus leaving. And so that's kind of how I think about it, how Justin and the team think about it.
All right, so now you guys went out to New York. You had great conversations with them. What happens next?
Oh, sure. So, making investment, it's always a unique process. And sometimes the entrepreneurs are out there looking for money and coming to you, and sometimes we go to them. In this case, we kind of developed this relationship with Justin when he was not raising money. And then when he was thinking about potentially raising money, we already knew the team, we already knew the app, we already had some data. And so we were kind of ready to decide whether or not we wanted to invest. And Justin was kind of ready to decide whether or not he wanted to partner with Shasta or someone else. And so, I think it was 2 or 3 months after we first met with him that Justin kind of told us that he was thinking about potentially raising more money, and we were really excited about it. And so we went and visited one more time in New York, and then gave him an offer to invest. And that was the process. It was pretty quick.
Right. So now you serve on the board for them. What type of role, and you also serve on the board for Class Dojo, Timehop, and Block, each of the companies that you let the investment in. What role do you play? Is it different at every company? Is it pretty similar?
Sure. To be clear, I'm a board observer at those companies, and so so I'm not a director of the company. But I do get to attend the board meetings, and our relationship with entrepreneurs at Shasta is kind of unique in each case. We're the type of firm where our view is the entrepreneurs are running the company, the entrepreneurs and the team are building the product, and our role as investors, as good board members, is to be as supportive as possible to whatever the entrepreneur and the team's needs are. And so in some cases, the entrepreneurs we partner with want us to be really involved with helping to recruit the team, helping to think through kind of product strategy, and helping think through brand and PR and marketing. And so those are a lot of the things that we help with. In other cases, the entrepreneur doesn't want our help for those things. They want our help maybe for other things, or more like high-level decisions. And so, we hope to be the first call for our entrepreneurs whenever there's some kind of decision that they're struggling with, or something that they need help on. And so that's kind of how we view the relationship.
I love it. So I want to dive a little bit deeper into these investments, because I'm really into all of the startups that you led the investments in. Let's start with Class Dojo. They have 35 million people using the product. Why is it so sticky?
Yeah, Class Dojo is this product that enables teachers to manage behavior in the classroom and communicate with parents. And so the way it works is teachers sign up for Class Dojo. They input their class of students, right? Third grade class with Jenna, Nikhil, and others. And then teachers give feedback to students for good and bad behavior. So in the app, and it's typically happening now on mobile, think of the teacher with the mobile app or with the phone in the classroom, awarding points to Jenna for asking a question and Nikhil for helping a friend, and those kinds of behavior points. And then parents of the students can log in and see how their kids are doing. So what makes Class Dojo really sticky is, one, it's a real pain point for teachers. Teachers often, what they really want to do is teach math or English or whatever their passion is. What they end up dealing a lot with is behavior issues and challenges. And so Class Dojo kind of addresses that by this really fun tool the students love that encourages positive behavior and helps teachers just get to focus more on the academic side. And two, and it's really easy to use. It's a great experience. And so those things really help it be sticky. The second thing is, you can imagine if you're a parent, exactly, you're going to want to know how your kid, how your student is doing. And you're going to want to check a lot, really frequently. And so that engagement from parents, where they can, for the first time, see like how well their kids behave and get to understand more about their kid's character, is really compelling.
I want to shift gears super fast to Timehop, because
Sure.
I read an awesome statistic and I was so shocked that more people check their Timehop than read the New York Times and USA Today.
Yeah.
I could not believe that.
It's probably something like 4 times the amount.
What is making people check their Timehop?
Yeah. So Timehop's this app that shows you this day in history on your digital life. So, it takes your photos from your camera roll, posts from Facebook, Twitter, Instagram, Dropbox photos, all these different sources of digital history for you. And, today, April 16th, my Timehop is showing me all the things that I've done on this day across all these different networks. And so I think of it as like the way to be able to see your life journey and look back on your life journey. And you can imagine that's really compelling content. The other thing is, because you only get to see what you did on this day. I really want to check my Timehop every day to see what I did this day in history, because if I miss it today on April 16th, tomorrow on April 17th, I don't get to see what I did this day on April 16th. And so, actually, can I pull up my Timehop?
You can definitely pull it up.
I looked at it this morning. This is Timehop. I don't know if you can see it, but 3 years ago on this day, I was visiting my sister at Brown University, and this is an Instagram, I think.
That is so cool.
Yeah, Instagram 3 years ago today. And so what I can do, and this is what I do a lot, is I'll hit the share button. You can see that image now, and then hit share, and then message it to my sister to remind her that, there it is. And now I can send it off in an iMessage to remind her that I was at Brown seeing her 3 years ago on this day. And so, they're just growing organically by word of mouth. Over 7 million people check it every day. It's
incredible.
Pretty crazy, yeah.
When it comes to thinking about your investments, whether it's finding out about the company or actually investing in the company, what's your favorite part of the job?
I live for those first meetings with entrepreneurs where in the first 10 minutes, you're hooked. And if I think back to, I've been lucky to have a few of these moments in the last 2.5 years at Shasta, and before that at my previous firm.
Give me some of the moments. I want to know. I'm excited now.
Yeah, I mean, when I first met Sam and Liam at Class Dojo, just the way they articulated the problem that teachers face managing behavior in the classroom, and why they built this product, and then how the product has just taken off in the hands of teachers without them spending any money to acquire teachers. They've never spent money to acquire teachers, and it's now used by millions of weekly active users. Um, and so just like the combo of really smart entrepreneurs plus vision for the product and where they want to take this, plus data to support how well they're already doing, just grabbed us in those first.
That was all in the first 10 minutes?
Yeah, I'm pretty sure they did like.
That is impressive.
They did like this team and problem, and then they just showed this boom hockey stick growth, and so I think another skill that I've seen really pay off for entrepreneurs is that ability to tell the story. And I remember like that night I just couldn't stop thinking about Class Dojo. I think it was on like a Friday, and we had them in on Monday to meet the whole team because we were so excited about it.
How did you get through the weekend?
No, literally the weekend. I think I was in Tahoe.
Oh, good. You had some fun stuff going on.
And
That's okay.
no, I was actually writing like the investment memo for why we should invest in Class Dojo from up there, and sending it to my partners Jim and Sean and Todd. But I was just so excited. Like I remember, I think I told my parents about it. I was like using the product. And so those kinds of moments are the ones that I still get so excited about. And I think the key for me is when you just feel it in those first 5-10 minutes, taking that gut instinct and moving forward with learning more about the company.
So when it comes to your gut instinct, let's say it's a really crazy idea. So we're back a couple of years ago, and Brian Chesky saying, hey, I have this cool idea for Airbnb. And you're sitting there thinking, I am not sleeping on a stranger's couch. How do you avoid yourself from constantly saying, what if it doesn't work? What if this is a total embarrassment? What's going to happen?
Yeah. Well, I think that's, I think it's really hard to do venture capital if you start asking those questions, because yes, on the one hand, you have to be naturally skeptical. You're only going to invest in a couple companies every year at a place like Shasta. We only do 10 to 15 investments every year. And so we have to say no to almost everyone. But you also have to believe, and you can't make an investment unless you believe it can be way bigger than what it is today. And so, and the other thing is, like, you're probably doing something wrong if you're not taking crazy bets, and you're not getting lots of total failures, because I think that's the only way that you get to invest in the really special companies. And so that's kind of how I rationalize it, right? In those, the crazy bets that don't work, like you lose 1 times the money that you put in, and you're living for the crazy bets that do work, where you're right, and where you built something really special.
When it comes to crazy bets, thinking of the early rounds, I'd read a great question from Charlie O'Donnell that he asked Hunter Walk last week. I don't know if you've heard it.
I don't think so.
So Charlie said, if Zuck was raising $20 million at a $200 million valuation based on an idea that was drawn on a napkin, would you invest?
Huh. Again, I mean, hindsight is obviously 2020. And I don't know how people reacted to that question.
Hunter said yes, and then I asked Richard Kirby over at Venrock, and he said yes. And Richard said yes before I could even finish the question.
That's funny. Obviously the answer is yes, looking back. Mm-hmm. But I don't know. I mean, I think it would have been, that would be a really hard bet to take. it's really hard to invest in something pre anything, for $20 million at that kind of valuation. So I don't know.
It's a tough one. I didn't know. I didn't know either.
Yeah. It's Mark Zuckerberg was clearly his thoughts on what Facebook could become were clearly really extraordinary. And so I could see him completely blowing people away, even with just an idea on the back of a napkin. But I don't know.
When you think about Series A in the early rounds, back in January of 2014, you wrote a great post talking about it. And I was excited to read it because I've just started learning about the Series A crunch that people are talking about. And I was excited because I was like, oh, hey, this was going on a while ago, and Nikhil was already on top of it. Have you seen it change from that post, or are things largely the same?
I think things are largely the same. This post, it's called "What's Up with the Series A," is where I talk about how we're seeing many Series A rounds being 10, 15, 20, $25 million rounds versus 5, 10 years ago when the Series A was like a $2, $3, $6 million round. And so, in the last year and a bit since I wrote that post, we've basically seen the same trend. A lot of companies, entrepreneurs, when the company has momentum, are able to raise larger and larger rounds. And when companies don't, they often raise much smaller rounds. And so this kind of bifurcation of the Series A has absolutely continued.
So is this a bad thing, or what are we supposed to make of it? Or is it
That's a
just
good
something
question.
that's going on?
It's something that's going on. I think that the challenge is it's clearly a good thing for the companies that have momentum because they're able to raise more money more quickly at higher valuations than ever before. But it's challenging for the companies that don't have that because all of a sudden you're an entrepreneur and you're not doing quite as well as someone right next to you, and they're just taking off and raising these rounds, and you're seeing yourself struggle, and so it can be or struggle to raise even half that kind of money, and so it's kind of like inequality, right? Like, it's great for the haves. It
Not so
sucks
great
for the
for you.
have-nots.
So just something to be aware of then.
Yeah, yeah.
But before we close, I want to touch on a couple things for the future. I know you're also really interested in health startups. What would be an awesome health startup, whether it's an app, company, service that could come out that you'd love to invest in?
I wish I knew the perfect answer to that because then I'd try to find it or figure out how to start it. But there's a couple areas that I've been excited about. Clearly this device is changing the way people can get access to healthcare. We're an investor in a company called Doctor on Demand that enables people to click a button and get access to a board-certified physician and have a face-to-face video call with them, and it's really an awesome experience. I always say that I hope you don't have to use it, but if you are sick, use it and you'll just be blown away. But a lot of what I think about is like how we can use this device, how we can use the device that'll be over here to better improve people's health. And I think there are lots of areas where we haven't seen yet the breakout company. One of those areas is something that people struggle to talk about a lot, but a lot of people suffer from mental health, which is a broad category, right? Like that includes people who have anxiety or psychological disorders or just have trouble sleeping. There's a lot in there. And, I think there are a lot of people working on trying to build a company that educates people around mental health and really helps people with that. And I can see that lending itself pretty easily to mobile, to a watch, to ways that you can easily or really quickly interact with someone to get help. So that's one of the areas that I think about. But I think there's so much opportunity there, and it's been really tough to crack the consumer healthcare go-to-market. But I'm hoping that there'll be a bunch of companies that do.
I love that idea, and to be honest, I never even thought of something like that, because when you think health right away, you think like, how can this track my exercise or how much I'm moving and all that stuff. I love it. And speaking of health apps, have you heard of Health IQ?
Yeah. I know the team there, Munjal and team quite well.
So you have the app then. I'll look for you. I'll challenge you.
I have the app. You can challenge me. It's pretty. The questions are pretty tough.
No, this is like my game. I'm very competitive when it comes to Health IQ.
Okay. I look forward to that.
Yes, you got to start practicing. I'm generally a calm person, but it like causes me to start shouting and silencing everyone.
That's
and
awesome.
They're actually going to have an Apple Watch. Manjal was just telling me that an Apple Watch version where 4 times a day you get a question.
Yeah, that's awesome.
I love that. What are your thoughts on the Apple Watch right now? Are you going to get one?
Yeah, I just haven't decided which one. And in most cases, like I don't actually want to touch and feel like I was perfectly happy just pre-ordering the iPhone 6. With this, I kind of want to go in there and just like
check it out,
feel out which one I want. I was gonna pre-order it, and then I saw that the ship date was anyway June, and so I feel like,
might as well
go and check it out and figure out which one I want.
Awesome. So last question, Nikhil. We're reverse time hopping. So going to the future.
Okay.
It's 2025 years from now. You and I have battled over numerous health IQ quizzes. Ironically, I'm the champion, but that's okay. We can let time.
I'm sure you are.
What stories do you want to be telling, whether it's about companies you invested in or where you are as an investor? What do you want to be talking about in 2020?
I think I want to be talking about, the special interactions I've been lucky to have as an investor with amazing entrepreneurs, and having great stories about both amazing success and failure, from getting to work with these great entrepreneurs, and hopefully lots of amazing success versus lots of amazing failure. But that's kind of what I love about my job, is I get to spend time with people who are doing things to change the world, and we get to, on the venture side, we get to be sort of people sitting on the sidelines but cheering on the people we support on the field. And so, I want to be that proud supporter who has gotten to see some cool stuff happen.
Lots of great 10-minute meetings then.
Yeah.
Thank you so much for spending time with me today. How can everyone stay up to date with what you're doing?
You can follow me on Twitter at NBT. And, I hope to blog more at Medium as well.
The blogs are great. Step it up, my friend.
Yeah, no, I know. I need to do more of those. But Twitter is, I think, the very easiest, simplest way to follow me.
Great. Thank you so much.
Okay. Thanks. Thanks, Jenna.